In today's video, you'll learn essential tips on avoiding liquidation when trading perpetual futures. We'll cover how leverage, margin, and risk management can help protect your investments and prevent forced liquidations. Let's start by understanding how perpetual futures work. They are unique because they don't have an expiration date. Instead, they have a funding rate, which is a fee traders pay or receive every 8 hours. This rate depends on the difference between the perpetual futures price and the spot price. When the funding rate is high, the market tends to be more volatile, which increases your risk of liquidation. Next, let's talk about margin. In futures trading, you need to maintain a minimum margin level to keep your positions open. If your margin drops below this level, you'll receive a margin call. If you don't add funds, your position will be liquidated. To avoid this, regularly check your margin levels and keep enough balance in your account. Now, let's discuss leverage. Leverage allows you to control a larger position with a smaller amount of money, but it also increases your risk. The higher your leverage, the closer your liquidation price is to your entry price. For example, with 10x leverage on a $100 position, a 10% move in the wrong direction could wipe out your trade. So, it's crucial to use leverage wisely. Setting stop-loss orders is a great way to protect yourself from liquidation. A stop-loss automatically closes your position when the price reaches a certain level, helping you limit your losses and avoid getting caught in sudden market swings. Finally, effective risk management is key when trading futures. Decide on a maximum amount of risk you're comfortable with and stick to it, no matter what's happening in the market. To sum up, avoiding liquidation in perpetual futures trading comes down to 3 things: managing your margin, using leverage carefully, and setting stop losses. By following these strategies, you'll be better equipped to protect your capital and avoid forced liquidations.